Hey, everyone! Today, we're diving into Bitcoin, the digital gold everyone's been buzzing about. But the big question is it really the modern-day gold? Now, let's be real, most of us probably think of Bitcoin as this mysterious internet thing that people somehow made millions from. And honestly, you're not wrong. Here's a wild thought. Back in 2010, you could buy a Bitcoin for just 10 cents. Let that sink in. If you had been bold enough to throw $100 at it, you'd have snagged 1,000 Bitcoin. And if you just left it alone, fast forward to December 2024, you'd be sitting on a cool $100 million. Oh, and get this, the first ever Bitcoin purchase was for 2 pizzas. Yep, someone spent 10,000 Bitcoin for pizza in 2010. At today's value, those pizzas, they're worth around $1 billion. Let that be a lesson. Never underestimate the power of hodling. Or pizza cravings. So, is Bitcoin really the new gold? Stick around as we break it all down. Alright, now that we've touched on Bitcoin's wild potential, let's dive into the real question. Is Bitcoin digital gold or just a flashy gimmick? And just so you know, I'll be linking all the sources I'm using in the description below for those of you who want to dive even deeper. First things first, let's break down what Bitcoin actually is. Now, I'll keep it simple. We could go deep into the weeds, but let's save that for another video. For now, I'll try to explain it in a way that even your grandma could get. Let's start with the original source, the Bitcoin white paper, written by the mysterious Satoshi Nakamoto. This is where it all began, and if you really want to understand how Bitcoin works, this document is key. At its core, Bitcoin is a payment system based on cryptography, not trust, like the traditional financial system. What does that mean? Well, it allows people to send money directly to each other, with no middleman. That's right, no banks, no credit card companies, no government interference. Now, I know I just threw out a lot of techie words like blockchain and decentralized, but the bottom line is this. Bitcoin is a financial system that runs on its own, powered by a tech called blockchain, and it doesn't need a single country or government to control it. Sounds cool, right? But let's get real for a second. What does all this mean for the everyday person? Well, Bitcoin gives you the chance to own and manage a digital asset, something that's entirely in your control. No one can take it from you, and you don't need to trust a third party. Now, let's get into the fun part. How does Bitcoin stack up against regular cash and gold? Let's compare. Emission. Let's talk about Emission, how new Bitcoin is created, and why it's different from fiat money and even gold. First up, Bitcoin. There will only ever be 21 million Bitcoins ever. That's a hard cap written into its code. Every 10 minutes, a certain number of Bitcoins are born through mining. But here's the twist. The reward miners get for creating Bitcoin is cut in half every 4 years. In the beginning, back in 2009, miners earned 50 Bitcoins every 10 minutes. By 2012, that dropped to 25 Bitcoins. In 2016, it was halved again to 12.5 Bitcoins. And this cycle continues until we hit that 21 million limit somewhere around the year 2140. In short, Bitcoin is designed to get scarcer over time, making it kind of like digital gold. Now, let's compare that to fiat money. Take the US dollar, for example. If you check out the M2 money supply graph, which shows the total cash, coins, and bank deposits in circulation, you'll notice one thing: it keeps going up. And here's the kicker: we have zero control over it. Governments and central banks can print money whenever they want. And how much? That's anyone's guess. The result: inflation and a gradual decrease in the dollar's purchasing power. But what about gold? Unlike Bitcoin or fiat, mining gold is a physical process. Over the past 100 years, the annual production of gold has increased dramatically. Today, miners extract around 3,500 tons of gold per year. So, what's the takeaway? Bitcoin is finite and predictable, fiat is unlimited and unpredictable, and gold sits somewhere in between, hard to get but still increasing in supply. Transfers of funds. Let's talk about transferring funds because what good is money if you can't use it freely? In the traditional banking system, your account can be blocked for a whole list of reasons. Maybe you need to explain where your money came from, or you're limited in how much you can transfer overseas. Sound familiar? Under these conditions, it's hard to feel like you truly own your money. Now, here's where Bitcoin flips the script. With Bitcoin, you're the boss. There are no restrictions. Want to send money across the world? Go for it. Need to move a large sum? No problem. Plus, your Bitcoin wallet can't just be frozen or blocked. You're in full control period. But what about gold? Well, you do completely own your gold, which is great. However, it's not as easy to use. Exchanging gold is more complicated, and exporting it can sometimes be restricted or outright banned. So when it comes to the freedom of transferring value, Bitcoin clearly stands out. No middlemen, no restrictions, just you and your money. Value. Now let's talk about what gives money, whether it's dollars, Bitcoin, or gold, its value. The US dollar gets its value from two things. People believe it's valuable. It's backed by the strength of the US economy. But here's the catch. If the US ever stopped fulfilling its obligations to creditors, or if trust in the system were shaken for any reason, that belief could crumble and the dollar might lose its value. Now, what about Bitcoin? Like the dollar, Bitcoin's value also relies on people believing in it. But here's the difference. Bitcoin offers something unique: decentralized autonomy. This means no single government or institution controls it. For many, especially those who support libertarian ideals, this independence from centralized authorities is a big deal. There's also the tech and infrastructure behind Bitcoin. The mining industry is massive. Miners invest millions in high-tech hardware. They consume an incredible 80 terawatt-hours of electricity annually, on par with Chile, a country of 20 million people. Right now, there are about 19 million bitcoins in circulation, with a total market cap exceeding $1.5 trillion. Bitcoin's capitalization is greater than the capitalization of companies like Visa, Walmart, Tesla, Meta, and even greater than the capitalization of silver. Mining is so big that some of the largest mining pools are listed on major stock exchanges like the NYSE, NASDAQ, and Toronto Stock Exchange. And what about gold? Gold's value comes from its rarity and utility. It's tough to mine, and there's only so much of it on the planet. Plus, gold isn't just shiny, it's super useful. It's vital in industries like chemistry, medicine, and electronics, making it valuable in ways beyond just being a store of wealth. So, whether it's faith in the dollar, decentralization with Bitcoin, or tangible utility with gold, each has its own story of value. But which one resonates most with you? Conclusions. All information in this video is not financial advice and is the subjective opinion of the author. So, can Bitcoin be considered modern digital gold? I'd say yes. Here's why. The supply of Bitcoin is capped. There will only ever be 21 million Bitcoins. It doesn't deteriorate over time, unlike some physical assets. It's decentralized, and every transaction is publicly verifiable on the Bitcoin network. Counterfeiting Bitcoin is extremely difficult. To do so, someone would need to control 51% of the network's computing power, an almost impossible feat. It offers pseudonymity, meaning your identity can stay hidden. And it's easy to exchange, with no restrictions. With all these traits, Bitcoin has earned its title as digital gold. But hold on, it's not all sunshine and rainbows. Let's talk about some potential downsides. The 51% attack. If a miner somehow gains control of 51% of the network's computing power, they could theoretically create fake blocks. But let's be real, this is highly unlikely. The cost and effort to pull this off would be astronomical. Spam attacks. This involves flooding the network with tiny transactions to slow things down. However, as Bitcoin's price rises, these attacks become less attractive because they're expensive to pull off for little gain. Core code attacks. Could someone hack the Bitcoin code? So far, the answer is no. Since its creation in 2009, Bitcoin's code has stood the test of time. It's never been successfully hacked. The faith factor. Bitcoin's value relies heavily on people's trust. Satoshi Nakamoto, Bitcoin's mysterious creator, has been silent for years, and the Bitcoins they mined remain untouched. If Satoshi ever reappeared and started manipulating Bitcoin, it could shake people's confidence. The good news, these scenarios are extremely rare and, in most cases, prohibitively expensive to pull off. Bitcoin's resilience and design have kept it thriving for over a decade. And with that, I'll wrap things up. Profit all, and I'll see you in the next one.